Welcome to the deep dive. So, you've likely seen the material we're discussing today, focusing on this idea that America's economic map isn't just changing, it's being actively redrawn.
That's right.
We've really dug into these LoopMarket deep dive series documents, the ones authored by Devin McClarty, published by D Publishing Group, and owned by D Investment Enterprise LLC.
Yeah, fascinating stuff.
And our goal today really is to unpack what they're calling the structural migration. It's not about collapse, they argue, but more of a national rotation, capital, people, belief, all shifting.
Exactly. And if you're just watching, the day-to-day market news, you're probably missing these deeper currents. It's a reallocation, fundamentally.
Okay.
And to grasp it, standard metrics like quarterly GDP, they just don't cut it. You need a specific toolkit, which the authors developed. They call it structural intelligence.
Structural intelligence. Okay, let's break that down. So this isn't about tracking last quarter's earnings or jobs report. It's about the underlying design, the strengths and weaknesses.
Precisely. It's designed to measure the hidden forces that actually, make or break a system's long-term health. Things like faith, flow, and confidence.
Faith, flow, confidence. Okay.
Yeah, and the clever part, I think, is how the documents translate these, fairly abstract ideas into actual measurable data points. They use three specific intelligence systems.
Ah, the structural triangle.
That's the one. It forms the framework, giving us a lens to see the economy's real architecture, not just the surface activity.
Okay, let's lay out those three indices for everyone listening. So, foundationally measuring faith. That's the MDI, the Fiscal Flow Tracker.
Correct. MDI digs into state-level fiscal health, that discipline. Then moving up the triangle, you get flow, measured by the MFI, the Municipal Flow Engine.
Right, the MFI. And that's about not just how much money, but how fast it moves.
Exactly. The velocity, the kinetic energy within cities. Is capital circulating or is it stuck?
Okay. And the third leg of the triangle may be the most crucial. Confidence. That's the RCI, Regional Confidence Index.
Yes, the RCI. Think of it as the behavioral trust metric. Are people, are businesses actually willing to bet their future on this place, to build something?
It's interesting how they frame it with core questions, too. Makes it very direct.
It does. It distills it right down. For the MDI, the question is basically, is this state government building stability for the long haul through, sound design? Or is it just buying temporary stability with debt or by extracting too much?
Building versus buying stability. That's a stark way to put it.
It is.
And for the MFI, the flow measure.
The question becomes almost mechanical. Is money actually moving, circulating, creating momentum? Or is it getting trapped in, say, obligations, bureaucracy, red tape?
So is the engine running smoothly or is it gummed up?
Pretty much.
Right.
And then the RCI asks that fundamental human question. Do people believe enough in this region's future to actually invest, to put down roots, start that business?
Okay. Answering those three gives you the real picture.
You understand the core design, yes.
That sets things up perfectly. Let's dive into Engine 1 then. Faith and fiscal flow, the MDI. This is about that foundational stability, right? How states manage their books, which signals long-term faith.
Exactly. And the MBI scores reveal a lot very quickly. The documents classify states based on these scores, showing who's managing by design versus who's, frankly, just kicking the can down the road.
They use Michigan as an example of a positive case.
Yeah, Michigan scores below -3% on the MDI. That puts them in what the authors call faith-strengthening territory. It suggests they're governing with fiscal discipline, sound accounting. That creates a stable, predictable base.
Okay, stable base. But then you have giants like California and Texas. Where do they fall?
They're classed as pressured but functional. Their MDI is between 3 and 5%. Huge economies, no doubt. But the score indicates they're feeling the strain of their fiscal commitments. There's pressure there.
Pressure, and then the real warning signs.
Those are the dependent zones. Think Illinois, New York. Their MDI scores go above 6%.
6%. And that means?
It means they're essentially buying stability, not building it. Relying heavily on debt or on high taxes levied on maybe a shrinking base, often to cover huge legacy costs like unfunded public pensions.
Hold on, that's counterintuitive for somewhere like New York, isn't it? I mean, massive wealth, global financial hub. Shouldn't that buffer them from being a dependence zone?
You'd think so. But structural intelligence looks forward, measuring future health against current promises. New York, Illinois, yes, they have vast existing wealth, but it's heavily constrained by enormous structural liabilities.
So the future stability is mortgaged.
In effect, yes. They're using future capacity to pay for current spending patterns. And that creates deep uncertainty for investors, for businesses, for potential future residents. That lack of foundational faith, it really sets the limits for everything else.
That uncertainty, that lack of discipline, it must ripple outwards, impacting how capital actually behaves in those places.
Absolutely.
Which leads us straight into Engine 2, flow and capital velocity, the MFI, moving from the state level down to city mechanics.
Right. If MDI is the foundation's stability, MFI is the circulatory system's efficiency. It's not just about the amount of money a city handles, but the speed. How quickly does it move? Does it translate into real momentum, infrastructure, projects, growth?
Like a highway versus a traffic jam.
That's a great analogy. A high-speed highway versus just gridlock.
Okay, let's talk about the highways first. The high-flow metros.
Yeah.
Dallas, Houston, Atlanta, Miami. They're posting MFI scores over 4%. What are they doing right?
High velocity. They tend to prioritize quick, targeted spending on things like infrastructure. They often have more streamlined regulations. So money collected, whether it's taxes or investment, doesn't get stuck.
It gets back out there quickly.
It moves rapidly back into the system, fueling jobs, development. That speed itself creates a palpable momentum, and that attracts more capital looking for that efficiency. It feeds itself.
And the flip side, the low-flow metros. San Francisco, New York, Chicago showing negative MFI scores. You mentioned capital gets stuck in obligation loops. What does that look like practically?
It means the velocity just collapses. The money is trapped. Often it's servicing those big legacy debts we talked about, pensions, maybe drawn-out legal battles, incredibly long waits for permits.
So like trying to build something takes forever.
Exactly. If it takes, say, 3 years and a dozen permits to get a housing project approved in City A, maybe 6 months and fewer hurdles in City B, well, where's the capital going to flow?
To City B, less friction.
Less friction. In these legacy systems, as the documents call them, that friction leads to stagnation. Momentum just stalls out.
So, okay, faith is about the state's fiscal promises. Flow is about the city's circulatory speed. But what happens when that friction, that stagnation, starts hitting the people, the human element?
Well, that's the critical pivot point. Engine 3. Confidence, the RCI. The sources argue this is maybe the most important hidden currency.
Hidden currency.
Yeah, because it measures the willingness of people and businesses to actually act on their belief in a place's future. It's the ultimate decider. Are you willing to risk your capital, your time, your future here?
And the RCI isn't just sentiment, right? It tracks real actions.
Tangible behaviors, yes.
Yeah.
Things like new business creation rates, net migration flows or people moving in or out, and even local access to credit. Hard data reflecting choices.
So what's the RCI map look like right now, according to these documents? Where's the confidence high?
Well, there's a huge surge, apparently, across the Southwest and the Mountain West. RCI scores hitting over plus 6% in many areas.
Plus 6%. That's significant.
It is. And it's not just optimism. It's translating directly into booming numbers for new businesses, sustained positive migration. People are literally building the future there. Belief turning into action.
And conversely, where is it contracting? The West Coast comes up again.
Yes, the West Coast generally shows a contraction of trust with negative RCI values. And there's a really powerful insight in the sources here. They argue people aren't necessarily leaving out of fear, like economic collapse fear. They're leaving because they're just tired of friction.
Tired of friction. What does that look like day to day for someone trying to live or build a business there?
It's like death by 1,000 cuts,
Yeah.
It's the crushing cost of living that means you need enormous income just to tread water. It's fighting for years to get permits for a simple renovation or a business expansion. It's that feeling, I think, that the system itself creates roadblocks, that progress meets constant resistance, regulatory hurdles. When people just get exhausted by the system they're in, well, their confidence shrinks. They start looking for systems designed to enable progress, not block it.
That really reframes structural migration. It's less about panic, more about seeking efficiency, people voting with their feet and their investment dollars, moving away from that friction.
Precisely. Towards systems designed for less friction.
Okay, let's tie these three engines, faith, flow, confidence, together now. Because the core argument, the central thesis here, is that this is a deliberate national rotation, not some kind of across-the-board collapse.
Exactly. The convergence of the three indices tells the story. That's the power of structural intelligence. Look at the traditional coastal hubs, the legacy systems. Yes, they still hold immense historical wealth.
But they show the warning signs.
They often show negative RCI, that loss of confidence. Negative MFI, the capital flow is stuck. and MDI scores indicating significant fiscal strain or outright dependence. Functionally, they've lost circulation and trust, even if the old money is still there.
Whereas the design systems places in the Sun Belt, parts of the Midwest maybe show the opposite pattern.
A powerful alignment, yes. They tend to have those faith-strengthening MDI scores, fiscal discipline. High-flow MFI scores, often above that 4% mark, and strong RCI scores, that plus 6% confidence surge. It's like all three engines are firing in sync.
A synchronized system.
Yeah. So the shift becomes strategic, not chaotic. Capital, talent. They're migrating away from older systems that have built up too much friction, too many liabilities, towards newer systems deliberately designed for efficiency, for growth.
So the old coast might hold the static wealth from the past.
But the new centers hold the dynamic flow. And as the documents argue, flow creates power for the future. This migration is really a logical shift from high-friction legacy models to high-flow designed ones.
Okay, so after this really detailed look at the structural triangle MDI, MFI, RCI, what's the ultimate takeaway? What's the repeatable loop that, according to this framework, builds lasting economic strength?
It boils down to a really powerful virtuous cycle. And it has to start with faith. That fiscal discipline, that sound governmental design that creates predictability.
Right, the foundation.
And that foundational faith is what powers flow, the efficient, rapid movement of capital, get the money moving.
Okay.
And that consistent, reliable flow. That's what ultimately builds real confidence, the behavioral trust that makes people say, yes, I'll invest here, I'll build here, I'll move my family here. Faith powers flow, and flow builds confidence.
Faith powers flow, flow builds confidence, a clear cycle.
It's self-reinforcing when it works.
So for you listening, the big strategic insight from these LoopMarket deep dive documents seems to be this. Forget just the daily headlines. America's economic story, its future map, is being drawn by these deeper, measurable forces: fiscal design, capital momentum, human belief. And understanding that shift means recognizing that, in this new landscape, confidence truly is the new currency of design.